look who's here now. Eddie Ghabour back with us this morning. Are you still looking for new stock market lows before the end of the year? In other words, Eddie, is another big drop coming?
Absolutely, Stuart, and I would argue that it's already happening. And my message to investors is very simple. Don't fight the Fed. I find it interesting that we use that narrative when it's very bullish, but when it's bearish because they're tightening, we don't use that same language. And they are tightening at the fastest level in history. And what we're seeing now is credit going up. And whether we like it or not, this entire financial system is dependent upon credit. And when you raise the cost of capital for these businesses, your smaller companies have a tendency, some will go out of business, profits will really come in. Uncouple that with the inflationary problem that we have, we're in a very dangerous spot right now from a monetary policy perspective because it takes months for what they're doing to go into the system. And I'm afraid they're going to over tighten and cause things to get haywire. So I do think we're going to have a lower low after this bear bounce that we had. And at that point in time, as I've been saying, in the fourth quarter, we'll start nibbling again on the equities that we sold at the end of last year.
I just want to press this lower low story. Right now, the S&P 500 is at 39.06. I can't remember what the low was. Was it, what, about 36, 37, something like that? What was the low?
Yes. So we believe we're going to be lower than that by the fourth quarter because, again, when you look under the hood, things are deteriorating from a credit perspective. The bond market's been signaling this for months now with the inversion of the yield curve. The dollar hasn't been this strong. I believe it was August of '98. So these companies are going to have to revise earnings, in our opinion, because you got the strong dollar, inversion of the yield curve. You have the consumers. Look, there's a major energy crisis. We have folks in the United States that are going to have a hard time paying their utility bills. And you're going to tighten credits at the fastest pace in history. That's not bullish, unfortunately.
I'm still buying 2-year treasuries, holding to maturity, no risk, and I'm getting nearly 3.5% interest. I know you disagree with me. I know you think it's wasted money, but I'd rather take 3.5%.
I do not disagree with you.
Oh, okay.
I do not disagree with you at all. I think you're going to get some upside on treasuries because the 10-year and the long-term rates, when we go into this recession, are going to start to roll over. So not only are you going to get that yield, you have the potential for some nice appreciation on those bonds.
I knew I liked you, Eddie Ghabour. Thank you very much for being with us. We will see you again.